I reviewed 1,125 monthly income ETFs so that you do not have to spend weeks doing the same research. There has been a boom in monthly income ETFs over the last few years, and it can be very difficult to figure out which ones are truly performing well. Simply looking at the dividend yield is not enough, and relying on it alone can be very misleading. If you do that, you might end up losing money or missing out on better opportunities. After analyzing this massive universe of funds, most of them did not even qualify for this ranking. Before I reveal the countdown, it is important to explain the rules I applied. First, the ETF must pay monthly income. This video is specifically about monthly income strategies, so quarterly or annual payers were not considered. Second, the ETF must be at least 1 year old. I did not include brand new products because they do not yet have a full performance record. Third, the ETF must have at least $150 million in asset under management. This eliminates liquidity concerns and potential closure risk. For example, YieldMax Target 12 Semiconductor Option Income ETF, or SOXY, delivered more than 52% over the past year, but it did not meet the minimum asset threshold, so it was excluded. Fourth, the dividend yield must be at least 5%. The purpose of this ranking is income combined with performance, not growth alone. Fifth, I excluded commodity tracking ETFs. Even though funds like IGLD and SLVO delivered 1 year returns above 58% and 61% respectively, commodity-linked income products carry a completely different risk profile and were not included. Sixth, I excluded single stock ETFs. For example, GOOP or Curve Yield Premium Strategy Google ETF delivered over 50% in the last year while tracking a single company, but that is concentrated exposure and not diversified income investing. Seventh, I also filtered out ETFs that track cryptocurrency performance. While some crypto-linked ETFs generated explosive returns over the past year, they carry very high volatility and risk that is inconsistent with a stable monthly income strategy, so they were not considered. After applying all of these filters, only a small group of ETFs remained. This ranking is based strictly on 1 year total return performance at the time of recording this video. The countdown you are about to see reflects performance combined with disciplined selection criteria. Now let's begin with number 10. Number 10. Amplify CWP Growth and Income ETF with ticker symbol QDVO. QDVO delivered a 14.43% total return over the past year while paying a 10.46% dividend yield. It manages approximately $591 million in assets and charges a 0.56% expense ratio. QDVO combines growth-oriented equities with a covered call strategy designed to enhance income. This structure allows investors to participate in equity upside while generating strong monthly cash flow. The double-digit yield makes it attractive for income-focused investors, and the mid-teens total return earns it the 10th position in this ranking. Number 9. Westwood Salient Enhanced Midstream Income ETF with ticker symbol MDST. MDST generated a 15% total return over 1 year and currently offers a 9.52% dividend yield. The ETF manages around $200 million in assets and charges 0.8%. MDST focuses on midstream energy infrastructure companies, including pipeline operators and storage providers. These businesses typically generate steady fee-based cash flows that support high distributions. The strong energy sector performance over the past year contributed meaningfully to this ETF's ranking. Number 8. Parametric Equity Premium Income ETF with ticker symbol PAPI. PAPI delivered a 16.09% total return and pays a 6.99% dividend yield. It manages $317 million in assets and has one of the lowest expense ratios on this list at 0.29%. This ETF uses a systematic options-based strategy to generate premium income on a diversified equity portfolio. Its lower cost structure makes it attractive for investors who want enhanced income without paying high management fees. PAPI offers a balance between income and capital appreciation. Number 7. Amplify CWP Enhanced Dividend Income ETF with ticker symbol DIVO. DIVO returned 17.38% over the past year and yields 6.18%. It manages over $6.46 billion in assets, making it one of the largest funds on this list, and charges 0.56%. DIVO invests in high-quality, dividend-paying companies and selectively writes covered calls to enhance income. Its focus on quality businesses and disciplined income generation has made it a well-established option in the monthly income ETF space. Number 6. FT West SMID Rising Dividend Achievers Target Income ETF with ticker symbol SDVD. SDVD delivered 17.4% total return while paying a 7.67% dividend yield. The fund manages $839 million in assets and charges 0.85%. This ETF targets small and mid-cap companies with a history of rising dividends and overlays an options strategy to enhance income. Smaller companies often offer higher growth potential than large-cap dividend payers, which contributed to its strong performance. At this point, if you are enjoying this video and finding it helpful, do not forget to like, share, and subscribe. Subscribing ensures you will not miss future ETF rankings, deep dives, and income strategy updates. Number 5. FT West Rising Dividend Achievers Target Income ETF with ticker symbol RDVI. RDVI generated 17.65% total return and offers a 7.91% yield. It manages $2.84 billion in assets and charges 0.75%. The strategy focuses on companies with consistent dividend growth and enhances income through options overlays. Dividend growth companies often demonstrate financial resilience and disciplined management, which has supported both income and appreciation. At number 4, we have two ETFs. I have grouped these two ETFs in the same spot because they are somewhat similar and have similar return. The first ETF is FT Energy Income Partners Enhanced Income ETF with ticker symbol EIPI. EIPI delivered 18.87% total return and pays a 6.8% yield. The ETF manages over $1.03 billion in assets and charges 1.11% fee. It focuses on energy income partnerships and enhances yield through active strategies. Strong performance in energy infrastructure helped elevate its ranking. The second one is USCF Midstream Energy Income Fund ETF with ticker symbol UMI. UMI returned 17.03% and pays a 5.62% yield. It manages $454 million and charges 0.69%. UMI also targets midstream energy companies but with a diversified portfolio structure designed to balance risk and income stability. At number 3, we again have two ETFs because they are somewhat similar with similar performance. The first ETF is ProShares Russell 2000 High Income ETF with ticker symbol ITWO. ITWO delivered 19.3% total return and pays 10.9% yield. It manages $152 million in assets and charges 0.55%. This ETF provides small cap exposure through the Russell 2000 index and enhances income using options strategy. Small caps performed strongly relative to broader indexes over the past year. The second ETF is NEOS Russell 2000 High Income ETF with ticker symbol IWMI. IWMI generated 18.49% total return and pays a 13.52% yield. It manages $629 million and charges 0.68%. IWMI uses a tax-efficient options strategy on small cap exposure to generate high monthly income while participating in equity gains. At number 2, we have FT West Technology Dividend Target Income ETF with ticker symbol TDVI. TDVI delivered 23.67% total return and pays a 7.43% yield. It manages $283 million in assets and charges 0.75%. TDVI focuses on technology-oriented companies and enhances income through options overlays. Technology exposure combined with income generation proved to be a powerful combination over the past year. Before revealing the number 1 ETF, let's do honorable mentions. It is important to highlight several well-known monthly income ETFs that many viewers might have expected to see in the top 10. These ETFs did not make the ranking because their one-year total return was below 14% at the time of recording. Some of them are Goldman Sachs Nasdaq 100 Premium Income ETF with ticker symbol GPIQ, JP Morgan Nasdaq Equity Premium Income ETF with ticker symbol JEPQ, NEOS S&P 500 High Income ETF with ticker symbol SPYI, NEOS Nasdaq 100 High Income ETF with ticker symbol QQQI. These ETFs are popular and reliable, but over the past year, the S&P 500 and Nasdaq 100 underperformed small cap, international, and energy-focused strategies that dominate this ranking. As a result, they did not qualify for the top 10, even though they continue to deliver solid monthly income. Now, let's reveal the number 1 ETF. Amplify CWP International Enhanced Dividend Income ETF with ticker symbol IDVO. IDVO delivered 40.96% total return while paying a 5% dividend yield. It manages nearly $1 billion in assets and charges 0.65%. This ETF focuses on international dividend-paying companies and enhances income through active management. International markets significantly outperformed certain domestic segments over the past year, and IDVO captured that strength while still delivering consistent monthly income. Nearly 41% total return combined with monthly payouts earns it the top spot in this ranking. Now it's time for some closing remarks. Monthly income investing does not require sacrificing total return. The right strategy can provide 5 to 13% yield while still delivering strong capital appreciation. However, performance leadership changes over time. Markets rotate and different sectors outperform in different environments. Always evaluate diversification, risk tolerance, and long-term sustainability before investing. If this research saved you time and added value, consider subscribing for more detailed ETF breakdowns. Also, if you think I missed an ETF or if you would like to see a ranking focused on a specific theme, sector, or income strategy in the future, please share your suggestions in the comments. I would love to hear what you think to see next. I will see you in the next video.